Hey everyone, hope they're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to look at the dollar, yields, precious metals, commodities, and ETFs that I follow. If you guys need any help with the stock market or anything related to that, definitely check out finding-value.com. Become a platinum member. You can use the word discount in the coupon code and get yourself a discount. And we talk a lot about the markets, chart patterns, undervalued sectors and companies and all that stuff. I also do a lot of training on technical analysis, more of a bigger picture view. The daily stuff changes so fast. I think it's a little bit more difficult for people who have, we'll say, 8 to 5 jobs and stuff like that. But technical analysis can be applied on any time frame. When you look at longer time frames, you're charting the fundamentals of the sectors. When you zoom way in, like we're doing with these daily technical analysis updates, we're focusing more on the emotions and how people are trading with each other, because anything can happen. You can be Jekyll Hyde in terms of your personality, and that's exactly the personality that the markets can behave. So it can look good for a while, and then all of a sudden it just goes ballistic to the downside and then reverts back to the mean in the short term. So the short term, anything can happen. It's based off the emotions of humans and data and all these things coming out. But in the big picture view, you're charting the fundamentals, the long-term fundamentals of sectors and companies. And that's where I think you get the more reliable moves. But today, we'll dive in there. We'll look at the short term, and I'll give you my financial opinions around it. And we'll go in right here on the dollar first. So we've got the DXY, the relative strength indicator, because this is measured against other currencies. And today we have a massive day in the dollar to the upside. So I drew this and I said, we're kind of going back and forth. We've got buyers and sellers kind of dueling it out. Well, that momentum. So the way that I look at this is you've got this big buying pressure and not much selling pressure through here. There's momentum coming up here, but we had a little bit of selling pressure here. Today, it's definitely the buyers are in control, I should say, or the DXY is going higher, is in control. We got the big monster candle today, up 1.3% for the DXY. So we're definitely going to head higher in the dollar here. That's what it's telling me. And a lot of our commodities are priced in dollars. And when you price things in dollars, they're not going to like this type of move. And to me, it looks like we could continue higher in the DXY in the short term. So right now, if we back out and look at the big picture view, we've got this white line I drew across here. What that line is sitting on is a bunch of support. We've got buying and selling pressure that's all happened around that support level, a lot of it. And what happens there is we bounced on that support and we're starting to come back up. Now, it doesn't mean that this just has to come back down, even though we've broken to the downside of this upper channel. We broke down, but we could obviously come back up and do some sort of retest move. Maybe we come up here. I don't know the exact path that it will scribe. But in the short term, we are getting very strong pressures of the DXY to move higher. And that's going to have an impact on a lot of the other investments that people have. Yields, slightly lower today, down 0.25%, basically flat. So we've got a monster dollar rally today, and yields are basically flat. Bonds, the 20-year bond is slightly higher in terms of pricing. Again, I'm not exactly sure where this thing's going to go in the short term. We've got conflicting data all through here in the candlesticks. We've got bullish engulfing candlestick here, a bearish piercing here. There's no real evident area where we've got larger or smaller buying or selling pressures. So there's a big battle going on in this entire area here. The candlesticks are kind of even. We're throwing bearish engulfing, bullish engulfing, bullish engulfing, bearish piercing. It's all over the place. So we're having a real struggle and a battle at this time. And lots of the times when this happens, I just step back and say, you know what? I'm not going to participate in this and let the market kind of decide which direction it wants to go, because it's basically swinging back and forth in terms of bond prices. The 30-year yield, again, slightly lower today, but momentum's slightly up. This is a bullish piercing, which generally means that yields still want to go higher. So looking at this, short-term yields look like they want to go up, which means bond prices may go lower. But if you look at the bond prices, they're all over the place. This is a basket case right now, because usually what you want to see is you want to see a nice clear pattern, but we're zigzagging, we're moving all over the place. It's just going all over the place here. We can look at support levels. We can do that on a longer term time frame. Longer term, we've broken this big downtrend, and a lot of the times this comes on up to some area before it heads and pukes back lower. But right now, we've had that big kind of waterfall decline. Is this a kind of a pattern where we're going to head lower out of this, or is this going to kind of grind itself out and move on up? That's where we have to figure out which direction this thing's going to necessarily go. My guess is that yields are going to go higher and bond prices are going to go lower. That is my inclination. That is what I'm kind of seeing in the markets and what my thought is when I look at yields. The TYX-TNX ratio continues to go lower, which means that the curve continues to invert. And I'm just using the 30-year and 10-year. When this goes down, it's inverting. When it goes up, it's normalizing. Precious metals do not like a curve that's inverting. I don't know what the exact reasoning is. Maybe it's because it's inflation, maybe because it's perceived inflation, whatever it is. It doesn't generally like it when it goes down. The peak here is August of 2020, and then we had a decline in our in this ratio. We are still declining here, and I think people thought that we were going to base out here and start to move higher. Precious metals jumped the gun there, and it was ready to rip it to the upside. But if you notice recently, we've had some pretty strong inversion of the yield curve. And we're going to see what that looks like in terms of pricing in precious metals. So the CRB index down today. There wasn't much that was up today across the board. Anything priced in dollars had a tough day today for the most part. So we had a strong selling pressure day today in the CRB index. The CRB index didn't go down as much as the S&P 500 and NASDAQ. So this is the S&P 500. So we have that breakout of the downtrend, the retest move, and we're going to see if we're going to move up or if we're going to pull on back in this ratio. The ratio is dependent on these two asset classes' performance against each other. So if the S&P 500 dive bombs, we could still do very well in commodities and outperform the S&P 500, but we could both be going down in pricing of dollars, which is a possibility. But right now, the ratio is sitting right on support. Gold prices selling off quite dramatically today. Now, would I have guessed that this would have happened today? No, I wouldn't have. We had strong selling pressure here. And every time I see this, let me back out here real quick. Every time we try to run and we get above this trend line, we get dumped. We come above it, we get dumped. I don't know if that is done on purpose. I don't know if that's done by the markets and the free market dumping for some reason. I'm not exactly sure the full the causes behind it. But every time we get above this line, we have been dumping. And right now we are dumping lower. We've got strong selling pressure here. No real, I'll say, move to the upside in terms of big buying pressure. There's none. Now we had a little bit of a run here. And that's where I'm like, I would say the run could have moved higher here because of this small selling pressure day, but that momentum carried and we blew to the downside, which means, in my opinion, that there's probably more downside left. I did say, I think yesterday, that this could be like an A, B, C correction, and we might head lower in the short term, which is a possibility. And again, anything in the short term can happen because anything can drive the market. In a longer term perspective, it's driven by the fundamentals of these sectors: supply, demand, deficits, surpluses and stuff like that. There is a surplus coming, or there is a deficit coming in gold in the future, but that doesn't mean in the short term that we can't have pullbacks. So to me, this looks like we could continue lower. Same with silver. That is also looking like we could continue lower. We could even go back down to $18. Another really good buy point if that's where it decides to bottom out. So right now, the momentum is down. I don't see a lot of large green candlesticks. It did try to make its way higher here. This looked like it was going to go up, but today it definitely got smoked to the downside. So right now, with that momentum coming down, I do think that could potentially keep going lower. And then platinum's got, we've got strong selling pressure coming down. There's a big, strong selling pressure day, big ones there, big ones here. We try to come on up, but we continue to get just hammered. And generally, when you look at an upward move, you get large green candlesticks, small red candlesticks. That's the pattern that it likes to move in as you move up. It has to, if you're going to make ground to the upside, that the green candlesticks are going to outweigh the red ones. But we keep getting these strong selling pressure impulse moves coming out here, even in this upward move, which means there are sellers still out there. But on a big picture view, I mean, this thing looks ultra bullish to go higher. So are we going to come all the way back down to this level one last time down here? I think that is a possibility. We could get back to 840 like we did in September of 2022. I hope that's the case. I'm going to buy the crap out of it. There's also the possibility that we even go a little, well, I'd say it's probably around 840. That's probably about where we'll get, 835, 840. If we continue lower. And a lot of the times you get these kind of accumulation patterns where you get kind of like a 1, 2, 3, 4. Sorry, I did it here. It's 1, 2, 3, 4, 5, 6, 7. And then you get this kind of last leading hump like that. And then you get a lead-in pattern generally, and then you move on higher. So if that is an accumulation cylinder that I drew here, and we come all the way back, 835, 840, that's probably where I'll be buying, hopefully, a bunch of platinum. Hopefully it stays down there for a little bit. The XAU to gold ratio, it still has not broken out of this downtrend line, the big long-term downtrend line. We've broken out of this move higher to the downside, and I think we're probably going to get some sort of ABC correction. I think I talked about that yesterday. The big picture view, that's the pattern downtrend line we want to break. We have not broken it yet. The GDX getting sold off today. Definitely some stronger selling pressure. Again, you can kind of see we kind of had a lot of momentum coming down. We tried to move our way up, but we didn't have any large green candlesticks. And that's, I know it sounds like elementary, but when I look at all these charts, very rarely do I see a chart rocket higher without large green, I call it the green army showing up. You get large buying pressure and it overwhelms the sellers. It means that you've got more buying pressure than selling pressure, and it's the ratio between buyers and sellers. That's why you get large green candlesticks. But nothing really showed up here yet, which means we could still go down for a little bit in the short term. SILJ also, I mean, it's a little bit better looking, but again, we're still selling off. I still think we have to work our way out and kind of iron our way out of this. Crude oil also getting hit today. We've got strong resistance up at that 82 mark, and it looks like we could potentially head a little bit lower in the short term for crude oil. Natural gas, surprisingly, right on that support zone, holding steady in the face of all of this selling pressure in the market, because most everything is down today. But natural gas is bucking the trend. We're right on support, holding on support. XOP, yeah, you know me, a little bit down today. Really, it doesn't look too bad in relationship to everything else in the markets. We take a bigger picture view of this thing, and we're still kind of squeezing up here. And it doesn't mean that if we go past this trend line that it's, you know, all said and done. We can go sideways for a little bit and then break on higher, even though we could go on the right-hand side of that trend line. OIH also holding up quite well in relationship to the rest of the markets. I mean, it wasn't as down as crude oil. but we did have natural gas a little bit higher, but we're right on that resistance line. And you can tell we turned on it. So we turned back down. We've got good support and resistance in this channel for OIH. Big picture view, it looks fantastic for a move higher with time. The Sprott Physical Uranium Trust, puking a little bit today, but we did a little bit of a wick at the bottom, a little bit of buying pressure towards the end of the day. I said this before, whenever you get this selling pressure and you have no buying pressure, there's a likelihood that this could fall lower. And that's what we got. We sold off, we fell lower. Now we got to see what happens next. Are we going to continue down? Or are we going to get some buying pressure to step in and put some fat candlesticks in there where the Green Army shows up? All of this is kind of noise in the short term if you're a long-term investor, but short-term wise, it's puked. Now we just have to see what the response is to the puking. But I do not see any large buying candlesticks anywhere in this area yet. And URNM selling off a little bit. What I would have liked to see is a little bit more of this booty. I call it the booty, the closing of the candlestick. I'd like to see that come up even a little bit more, where it was a big hammer candlestick, a reversal pattern. But we did not get that reversal pattern, and we want to see what comes. Now, when I look at this, look at the circle here. Large selling pressure, and then it's not much buying pressure. They call that kind of a flag pattern. So it flag patterns down, and we've sold back off, and we're kind of dumping. We're puking out some shares here. So what we're looking for now is we're looking for buying pressure. We do not want to see continued large candlesticks lower that breaks through this bottom here at $30, which means we could see a further pullback if that were to happen, in the short term at least. The fundamentals are still good. And I know a lot of people ask, why is it selling off? Why is it doing this? We won't know what that why is. Even if people write an article on it, they don't know the why either. Someone is dumping the shares in URNM right now. Someone could be scared. It could be a hedge fund. It could be some sort of ETF selling, whatever it is. It's being sold off in the short term right now, and we're waiting for a bottom to occur, and we want to see reversal candlesticks. We have not seen that yet, and we could see further downside in the short term is possible and likely. So the way I look at it is sideways to lower in the short term until I see candlesticks that tell me otherwise. Looking at TAN, TAN is up against that resistance line. It actually fared pretty well today compared to everything else, and it does look good for a potential break, hopefully to the upside. It entered from the bottom side up. That is generally where you get that break. You've got the Batman pattern. You pull on down, and then you get your hump there. And then usually here, this is where you start to move your way on up. So it looks good. Now we're just waiting for the break. And if the overall markets continue to sell off, that's going to be headwinds for our big boy TAN here. COPX, a lot of selling pressure today. It finished quite low. And to me, this still could go lower with that momentum selling off. But again, we are getting close to this support area down here where we could come in and get some support. And maybe we put a wick on the bottom when we put a little hammer pattern in. But I do think there's still some momentum behind the selling pressure, and it's going to have to get worked off and basically reversed. And I do think it's going to reverse it, hopefully at like $36 or $35 in that area. Looking at lithium, lithium also getting that selling pressure today, finishing down right on support. We've got REMX also selling off, finishing quite strong. But we're also at this support level that we've been basically playing with these 3 times as well, and maybe we make it a 4th. I will say that we've been playing with this support level to the downside. So there is a chance that we break these things and actually move lower in a lot of these ETFs. That is a possibility as we're grinding and really pushing on the down, the lower support level. So we might see a sell-off to the downside. The S&P 500 selling off quite strong today. We also finished quite strong to the downside. So that momentum is still to the downside, but we're still above the trend line at this time. NASDAQ also selling off above a bunch of different support levels. We've got lots of support where that white line is going across, but we did sell off and it was a strong sell-off. EEM does not like that stronger dollar, selling off. And we're back to this trend line right here, right on top of it. XHB, which is the home builders ETFs, also selling off. A lot of these are selling off. Doesn't look horrible compared to some of these other ones. Still above support. Still looks all right. And now we want to see buyers come in. If the sellers continue to want this and we blow through this in one candlestick and head down here, then I could be convinced that we could see a lower move across the board if we see that selling pressure. Looking at MOO, also on support. Good, strong selling pressure day, but we're on support. We'll see if it holds. Looking at copper getting strong selling pressure. Again, this has been a battle here, guys. It's been a battle. Big buying pressure, big strong selling pressure, back and forth with data and all that. And I think I didn't look today because I was just looking at the charts. I do think Powell came out with some information. I'll have to take a look and give my opinions there, but I haven't had a chance to look at it yet. Looking at lumber just moving sideways. I think lumber looks fantastic, which makes it kind of interesting. Lumber is generally a leading indicator of the home builders, and the home builders are looking quite strong, which in my opinion, Powell's going to have to continue pressure with interest rates, maybe not continuing higher, but just he's probably going to continue it higher, but to keep the pressure on and keep the interest rates high. That's probably what he's going to have to do. But we're moving sideways with lumber. Iron ore, this is the Chinese iron ore, 125 down a teeny bit today. Nickel just moving sideways. Nickel looks fantastic in this general vicinity to be looking at. We've got aluminum also moving sideways. Aluminum, I think, is going to do incredibly good things over the next few years. I know in the short term we're bouncing all over, but I do think that'll work its way on higher with deficits in the markets out in 2024 and on. And they're increasing deficits. Baltic Dry Index, we got that false breakout, and it's been rocketing higher ever since. So that is a sector that is cheap. It's materially improving to the upside. So this is a fantastic sector to be looking at for potential investment, is the Baltic Dry Index and those shipping companies. Newcastle Coal getting socked in the nuts today, down 3.8%. Nobody likes seeing that on the scoreboard there, but we're down. And I do think that we're doing a return move to this base, the breakout of this base that we had here. So this is our base. We broke out. It was a massive breakout. We're coming back. General in this area, this is probably where we're going to return to. And then we're going to see our opportunities. Now, what I like to do is I like to wait. Wait for this to come all the way back down. Be patient. Let it bounce around. And then you start looking when it starts getting some buying pressure in the charts. That's what I do. Ethereum down a little bit. We've got, let's go to the dailies here, kind of zooming in. Small down day, doesn't look horrible. This is also battling here. And we very well could come back here and do a retest and see where we go from there. But most of the time when you get these downtrend lines and they break to the upside, they usually stay above it. They're pretty resilient unless it's a false breakout to the upside. But we'll see where it goes. Let's just monitor and see where this thing goes. I don't have any. I don't have a horse in this race or anything, but a little bit of a down day today, and it's basically a bloodbath between buyers and sellers, duking it out. Same with Bitcoin. It started here, basically some selling pressure, jammed it back up, but the sellers keep piling on there. They keep bringing this thing lower. So usually what happens is you'll get some sort of pattern. Maybe it'll kind of squeeze up or something like that, and it'll break one way or the other. But that's what I've got for today, guys. Hopefully you guys are holding through it. I've seen so many of these. You kind of just you become immune to it. Like you just kind of focus on the long term. It's like, hey, we got some selling pressure coming in the short term. Now, could this turn into something that is bigger? It is possible. Why do I think it might be possible? If we take the M2 money supply, this thing has been declining. So this is an invalid symbol. Let me scroll down and look at my other Of course, I blew right by it here. 1 second, guys. We'll get it up here. So looking at, of course, now I can't find it. Okay, M2SL. There we go. So the money supply has been declining here. That started in March of 2022, and it takes about 12 months to 18 months to basically filter through the system. If this money supply is money that is circulating in the system, it will have an impact and it will slow things down. And we could see things sell off or slow down or create a recession. That is a possibility. That's what the M2 money supply kind of coming up and coming back down. That's what we're seeing in the housing market. The housing market is slowing down. We have seen some selling pressures in the markets, but we're still at a housing start that I would say is it's about normal. So I don't think it's going to be horrible, but when people look at percentages, that is a percentage based off of where you're coming from. So if we were growing, we're going to be coming from a growing spot. And even if we flatten out, that could be declining on a year-over-year basis if we flatten out and kind of start to decline a little bit. And that M2 money supply is starting to decline on a metric of a year-over-year basis. So we can be seeing this stuff. Be prepared for a bumpy road ahead and get ready for what's coming ahead of us. Because they've pulled back on this M2 money supply, and that could be QT, quantitative tightening, and that's going to impact the financial assets more than the real economy money. So they're kind of split. The real economy money deals with more of the consumer price index and that type of stuff, and the money circulating in through around the economy. That is loans coming into the system from the housing market and whatnot. Some of this money is also stuck in financial assets, and that they're pulling back on some of those financial assets, and that can have an impact on real economy money as well, because it does impact the psychology and the wealth of people. It slows things down some. So definitely subscribe to the channel here. I'll keep doing these updates. We'll keep talking about all this stuff. I'll give you my opinions around all this. And when I see things come, if we continue to see selling pressure, we could see a pullback in the market that is larger if we start breaking some of our support levels. That hasn't happened yet in a lot of these commodities and a lot of the areas, but if the selling pressure continues, especially with the momentum it's got and the size of those candlesticks, we could see a further pullback. All right, guys, that's all I've got for today. We'll catch you tomorrow. This is Finding Value.